So my next pick is a cruise line. I couldn't think of what those were called.
They're boat. Big boat.
Good morning and welcome to the A.M Show. I'm Alex.
And I'm Michael.
And today's date is April 20th, 2020. We are going to get into our picks of the week here. We both have 3 stock picks for you.
My first pick, Alibaba Holding Group, stock ticker BABA. You know, Alex, I got a couple just tidbits here. Just a little overview what the company is. They provide online and mobile marketplaces in retail and wholesale. They're essentially the same thing as Amazon,
right? But
they're based out of Hangzhou, China. Another tidbit here, they have a large growth investment style. It's perfect for our 9 to 12 month investment horizon. Lastly, with the little tidbits here, is they are extremely undervalued right now, just as many companies are at this time. But the valuation we've set for Alibaba Holding Group is at around $250. They're steady, good company. Their earnings have been very consistent. The cash flows are excellent. They're really, really good. And I'm going to get right into our weekly entry point. If you can get them anywhere under $220 this week, that is exceptional. That is what we are looking for. Yes, our weekly exit price would be $235. So that's just a short-term weekly outlook on them. If you can get it anywhere in there, just collect your profits when you can if we're going week by week. Now, over the long term, this is something where it's more up to your own judgment here. Our valuation has them about $250, but you can also hold for longer than that. They're an exceptional company, and they are going to continue to rise above the valuations that anyone is going to be setting. It's only a matter of time before they really start to take over.
We're going to move into my first pick as well, Yelp, ticker
YELP.
YELP.
Go figure, right?
Yes. So Yelp, as you know, they have their online services where you can go and you can rate restaurants, locations of interest, and they make a lot of money from that, actually. So what I have noticed is that the last time we've seen prices this low of Yelp's share was in February of 2015, about 5 years ago. So we are at a pretty low point for the stock price. We're trading about $19.70 a share, and what we're looking for is that Yelp starts to trade in a range from about $27 to $48, right? That's where historically they've traded in that range for the last 3 to 4 years. Mm-hmm. So what that can mean for us is that if we can get in, our entry point being right around $20, we can buy and we can hold and wait for it to get to that trading range because it's bound to happen. Mm-hmm. And why I believe that it's going to get back up to that value is because we have very solid financials, actually. Mm-hmm. So one thing to note about Yelp's financial statements is that we have a revenue stream of about $1 billion, but the cost of revenue is only $62 million. So as you can see there, we have pretty exceptional gross margins. That's pretty solid. Next thing to note as well is that our current liabilities are $134 million, while our free cash flow is about $167 million. So what this means to me is that given everything that's going on, we will have enough cash on hand to pay liabilities that need to be paid this year. So I don't think what's going on right now will affect them. And therefore, when their next earnings come up, May 7th, I think we can see a stock price increase and essentially a profit.
Alex, my next pick here is a company we've talked about in a previous episode. We mentioned that they're opening some of their Washington plants back up, and that company is, of course, Boeing, stock ticker BA. There's a few little things that I want to say about them here. As we mentioned, they are opening up plants, which is going to revamp production. That's super important with them. They had a lull for I don't know, it's almost been a month now. That really hurt them for a while, and their stock price, it fell, I think, well over $150 from what its peak was, possibly even more than that. They're trading at around $153 right now. Extremely undervalued. Our valuations have them at around $325 a share. The return on equity has been really high in recent years, which is super important to look at. They're outperforming their peers in the market. Entry point for them this week is going to be at $158. Our exit point is around $165. There's a slight bit of resistance at $165, which means there could be a pullback when it hits that price point. So that's kind of our exit point. That could happen in a single day as well. So you need to be sure that you're monitoring the price of the stock and you're able to get in and get out when you need to. Over the long term, if you're just a buy and hold kind of person, that's great, because this is an excellent company to do that. Like we said earlier, their valuation's at $325, so you can just sit on them for a long time here.
Mike, I don't know about you, but I'm a big fan of big boats. Big water guy, big ocean guy. We're gonna transition into Royal Caribbean. Royal Caribbean has seen a stock price decrease of about $100. They were trading about $135 a share before this went down, and now we're down to about $35 to $40 per share. Don't quote me on the exact price. But what I really like about them, besides the fact that they're steeply discounted, is the fact that they have a $4.8 billion in gross profit, and they have $691 million in free cash flow. However, the only issues that we begin to see is the fact that they have $7.9 billion in current liabilities. And that's really concerning when you hear about that these cruise lines are not going to have a bailout from the federal government because they are not a U.S. company. So what Royal Caribbean has done to combat this, unlike other cruise lines, and why I pick them above everyone else, is they have raised approximately $6 billion in debt and equity. So less than 10% of that $6 billion was raised came from common stock. So a very small fraction of that $6 billion. And the rest of that has come from increasing their credit, so potentially increasing their long-term liabilities just to be able to pay for these short-term liabilities. So they will be able to pay off that long-term debt that they're taking on once operations get back up and running, and once they have cash flow coming in. So I think that we are in a good place right now. Our entry point for Royal Caribbean is going to be anywhere around $40 to $50, basically where the stock price is trading right now, because I think revenues are indicative of a stock price that could reach previous highs.
All right, Alex, I'm going to hop into my last pick here. This is a strictly long-term pick. It's not for the weak. This is something you're going to want to sit and hold on for a while. The company is Sony, stock ticker SNE. Another really solid company. They've got great management. They have weathered COVID-19 pretty well. They haven't really taken too much of a hit. They are still slightly undervalued. Our evaluation has them around $70. They're trading at around $63 right now. Their revenue has steadily grown over the last few years, along with their operating cash flow. That is something that's promising for the long term. As Alex and I have said before, technology, part of the future. This winter, the PlayStation 5 is going to be coming out. That's going to be increasing sales. This is strictly a grab and hold company. We're just going to continue to monitor them in future episodes, and we'll let you know if we see anything that is promising or not, and we will update you on that position in the future.
Thank you, Mike. I'm going to move into my last pick here. This is going to be a risk lover's pick. This is very risky strategy. It's involving options contracts. So if you're not familiar, then I would not recommend using this strategy. This is more of a bonus segment, let's call it. So my last pick is Tesla, ticker TSLA. And their earnings are actually coming up on April 29th. So in order to employ this strategy correctly and employ it well, I think you would want to set your strike price for both the call and the put somewhere right around where this current stock price is trading, about $750. Maybe place it slightly below that because about last week, I think it was, we had a bounce off the 200-day moving average. And the 200-day moving average is about $300, $400. So that was a significant price jump off that 200-day moving average. So I think we could see some pullbacks closer to that. So when our earnings rolls around, we want a lot of stock price volatility and we want it to move past the strike price of the call and the put, thus resulting in a net profit. All right, so we're just gonna recap our picks here. I had Yelp, Royal Caribbean, and Tesla.
And I had Alibaba Holding Group, Boeing, and Sony.
And these are our picks for the week. So we're gonna tune back in Wednesday morning with a update and a little recap of how the market is going and how market sentiment is for the week, because we know that changes very quickly. So thank you so much for the support.
Yeah.
Leave likes, comments, subscribe. Stay up to date with us.
Yeah, thank you so much, and we are ready to roll.